Asian markets received a boost after Beijing cut the amount of cash banks must keep on reserve to bolster the economy against trade tariffs and sluggish domestic demand. China-US trade tensions have eased somewhat as the two countries agreed to resume talks in October, though there are doubts if any material progress would be made this time around. China and the United States did agree to hold high-level talks in early October in Washington. The Hang Seng closed the day only slightly weaker, while the Shanghai Composite was 0.8% better off. The Nikkei was 0.5% stronger. The S&P 500 and Dow Jones Industrial Average closed slightly higher on Friday as investors digested a mixed U.S. jobs report and bet on a Federal Reserve interest rate cut this month, while China's stimulus plan helped ease some concerns around global growth. U.S. job growth slowed more than expected in August, with retail hiring declining for a seventh straight month, but this was countered by strong wage gains, which are expected to support consumer spending and keep the economy expanding moderately amid rising threats from trade tensions. Also on Friday, Fed Chair Jerome Powell said the United States and the world economy are not likely to fall into recession. Overall, the market was tipped higher as the Dow Jones Industrial Average rose 0.25% to 26,797 points. The S&P 500 gained 0.1% to 2,978 points, and the Nasdaq Composite dropped 0.2% to 8,103 points. Let's get more on the markets now. We cross to my colleague Arabile Gumede, who's standing by at the Johannesburg Stock Exchange. Very good afternoon to you, Arabile. Over to you.
Yeah, good afternoon, Nzinga. Well, a slightly negative market market picture right now, at around 0.5% down as well for the JSE All Share. So slightly negative, following through somewhat, I suppose, from the sense of negativity that has come through from Asia as well. Not too many too sure of exactly where the market will go, I suppose, on that front. China seeing exports, however, going down more than expected. Perhaps there's shipments to the United States began to suffer, and Japan's economy also recording 1.3% growth between April and June. That's the second quarter, a whole lot less than the first quarter, where it was 1.8% growth there. So fears of a slowdown in growth, more stimulus perhaps required and being sought as well then by investors into those markets. So that has begun to filter through, I suppose, on the local front. Some earnings news as well, the likes of AVI having come out today, and we'll unpack that in just a moment. And a slightly better rand as well. That rand pictured around 14.70 against the US dollar. Let's look at the numbers, however, and we'll get to unpack them in just a bit. Well, as you can tell, that market picture there sitting pretty positive for a lot more markets than the local front, of course, right? So negativity, however, for the local bourse. Let's talk then about the markets and that picture. Bright Khumalo from Vestact Asset Management joining us here as well, live from the JSE. Bright, thank you so much for the time. General market sentiment, negative South Africa, but it seems everybody else seems to be headed a little bit higher.
Yes. Last week here in the JSE, we closed up about 0.6%. The rand at 3 months high in terms of strength there, looking good. And that's mostly thanks to, Jerome Powell and his friends coming out and saying that they will do anything to prop up the market, to protect the U.S. basically from a potential recession. And they're also willing to actually further lower rates sometime this year. So they're playing it by the ear, and they will lower rates if necessary.
Look, we'll take it. We'll take it, right?
And that's obviously bad for the dollar, which is, the dollar weakens, and then it's good for the rand and all emerging market currencies and all other currencies, I guess.
But not necessarily that we've done anything ourselves to prop this up, right? Despite the fact that we had
good GDP numbers that did help.
Do enough?
Yeah, it did. I mean, it shaved off about 25 cents on the rand, so that has to count for something.
Yeah. Let's try and debunk something very quickly, if you don't mind, Bright. A lot of people have been asking the question whether the unrest that sort of happened last week, and even the unrest that happened outside the World Economic Forum, whether that played any part in strengthening the rand in some way, Could that possibly be true in any way?
Yeah, I heard the leader of the Red Berets basically insinuating that, when Africans fight, the rand rallies. Actually, no, that's not the case. It's because of the good numbers, the GDP numbers that came out on Tuesday, and the weakening dollar. So the rand is not just like a phantom currency that, lives alone in isolation in the market. It actually, the biggest driver of the rand and any other currency, many other currencies for that, is the US dollar. That's, that's the big daddy, that basically drives a lot of sentiment. And then, there's also, specific macroeconomic, issues, or maybe, goals as opposed to own goals in those markets, in those different economies. Yes, that does play a role as well, but I don't think, what he meant is the truth here.
Yeah.
I can comfortably say he's a liar.
Let's certainly hope that a little more understanding of how things work in this regard would certainly be put forward. Let's talk about some result news now. Up 1.63% today. AVI coming out with a set of earnings. Still tough when it comes to the fast-moving consumer goods.
Yeah. That's very funny because, like you say, revenues down 2%, 2.1%, and operating profits down 3%. Earnings themselves down 4.9%. Do you want me to carry on? Dividend down 4.4%. So things are not looking good in the operating environment, especially if you exposed a lot into the local market, which is, the likes of ShopRite, are doing very well here, meaning it's going to shave off, at some people, because what it means is it's hard to pass on price increases if you're not a market leader in your products. And we know market leaders are the likes of, if you look at Woolies, it's mostly Libstar. If you look at other places, it will be something like a Nestle or Pioneer Foods or Tiger Brands. So they exactly. So they come far, in terms of product placements and the likes, and it's hard to pass on those price increases, and we're seeing it in the bottom line, unfortunately.
Yeah, and as long as the consumer continues to struggle, they continue to struggle.
Yes,
right?
But things are, there's glimmer of light there, and if things do carry on in that way, maybe guys will go to Spitz and buy those Cavelas.
That's, I think, the tough one, actually. They're right here at the JSE. That's AVI, actually.
Yeah, I saw the paperback. I didn't get any, so I'm a bit angry.
I think I'm going to go downstairs and try and look for a Spitz paper bag, actually, and try and see if I can get one there.
There's Baker's biscuits in there, so don't get excited.
It's fine. It's still the bag, though. I can look like at least I bought one. General market sentiment, though, are we worried? Because it doesn't seem like the overall all share is headed in a particular direction. It feels as though we wait for one piece of news, then it moves, and then it, sort of shadows out again and does nothing. Are we moving in a particular direction? Would we really say that we're in a downhill or an uphill right now?
Look, if you look at the past 3 weeks, which have all of them been green, like being the last one, we were up 0.6% last week. It's what the market is signaling a lot of positive news for the next 18 months. But I don't know what this news is. Yeah. I'm like you. I'm confused. I'm waiting to see the good news. Right? We saw the first bit, which was the GDP numbers, but after that, the deficits didn't look so positive.
Yeah.
So things are not going the right way, and we're still seeing a lot of people fleeing the country, in terms of immigration, and that's usually the top 1% that can afford to leave the country, and they contribute a lot in terms of our tax collection for the receiver. So I'm still positive. I'm here in South Africa. I'm not leaving anytime soon. Hopefully that's what it's pricing that.
We'll do this until we're grey and old, right?
Exactly.
I suppose. Very quickly, that oil price also, any worries there? $62 a barrel. We saw Saudi Arabia elect a new energy minister, but they decided that things would remain the same. Should we be concerned as it now stays above that $60 a barrel mark? Or is there hope that it perhaps will recede back towards 59?
Look, I'm happier as a consumer, and I'm sure as South Africa, since we don't produce any oil, we're happier if it's lower. Yeah. So hopefully it goes to our direction and favors our because this increases petrol prices, input prices, SAFA. Then it means transporting goods and services from one place to the other. It becomes higher and more expensive, and that leads directly to our pockets again. Which means the per unit cost of the goods we buy are going to cost us more. So
Yeah.
unfortunately, that's not the direction we want to see it going.
Definitely not. Bright, thank you so much for the time. Appreciate it. Bright Khumalo from Vestact Asset Management helping us unpack that market picture live here at the Johannesburg Stock Exchange. So, a slightly negative market tilt there, as you can tell, just over 0.4% lower on that market in the JSE All Share. Will it close there? Well, we'll certainly see that a little bit later on. But for now, that's where the buck stops. It's back to Nzinga right after this.